I'd like to welcome for the final panel discussion of this event, Tamara Ferreira-Schmidt from the Digital Euro Association as the chair and moderator of this panel, Dr. Joachim Schwerin, a well-known face at the Crypto Assets Conference from the European Commission. It's always an honor to have you with us. Philipp Sandner, our chairman and host, Patrick Hansen from Circle, Jonas Groß from the Digital Euro Association, nice to see you again, Dr. Agatha Ferreira, from Status IM, and Dr. Klaus Alfert from Züge Engineering. Tamara, the stage is yours.
Thank you so much for having me, and for those who resist until the very last panel of the Crypto Assets Conference. I hope you have an interesting discussion. But before I start, I'd like to set up the panel structure, so we'll have time to discuss first among ourselves, and then some minutes will be dedicated to Q&A, so please prepare your questions. So first of all, I'd like to introduce the panelists. So here, to my left, sits Dr. Klaus Alfert. He's a distinguished consultant at Züge and advise companies to improve their software architecture, development processes, and methods. Before joining Züge, he did research on these topics at Dortmund University. Klaus is keen on innovative technologies and its blockchain tech lead at Züge. And remotely, here on the screen, we have Dr. Jonas Groß is chairman of the Digital Euro Association and head of digital assets and currencies at Etonek. Jonas holds a PhD in economics from the University of Bayreuth, Germany, and further is co-host of the German podcast Bitcoin, Fiat, and Rock and Roll, and member of the expert panel of the European Blockchain Observatory and Forum. Dr. Joachim Schwerin is the principal economist in the unity responsible for the digital transformation of industry at the European Commission. He's responsible for developing the policy approach towards the token economy and DRT, as well as their applications for industry and SMEs. Joachim holds a PhD in economics from Dresden University of Technology and was postdoc research fellow at the London School of Economics. Patrick Hansen, he's Director EU Strategy and Policy Advisor at Circle. He also advises Preside Capital and BFG Blockchain Founders Group. And last but not least, Dr. Agatha Ferreira is an international lawyer focused on Web3 space. Agatha is Chief Legal Officer at Status, an organization developing privacy-focused Web3 infrastructure. She's also an assistant professor at the Warsaw University of Technology, expert at the EU Blockchain Observatory and Forum, and frequently collaborates with blockchain projects and initiatives. Thank you very much for being here. We know that the term digital euro, it's not limited to a single technical platform or infrastructure, and the terms describes various solutions based on different technologies that can be used for different needs in different applications domain for different use cases. And at the same time, different entities can issue a digital euro. So the European Central Bank in a form of a central bank digital currency, commercial banks, or private firms in a form of euro stablecoin. So perhaps you can start with you, Jonas, telling us your view on the digital euro from a geopolitical perspective. How can digitized currencies help countries or regions expand their global importance?
Thank you very much, Tamara. It's a pleasure to be here, and I hope you can understand me pretty well with the mic. If not, please let me know.
Yeah.
Perfect. Great. So thanks for having me again. Also, thanks again for Marcel for the great introduction. I think it's my fourth time at the CAC, and also to see at the panel so many very, very familiar faces. So really looking forward to the discussion. So I think from a geopolitical perspective, both stablecoins and CBDCs, you mentioned it, Tamara, are really, really important. And what we currently see is that most of the stablecoins are basically US dollar stablecoins, right? So there's really a very, very high market capitalization, market dominance of US dollar stablecoins on the one hand side. And we also do see on the other hand side, when we look into CBDC, a very strong, momentum and progress in China, right? So we do kind of see these extremes emerging, because we know the ECB is looking into issuing a CBDC. We'll decide in a year. We also do see, and congrats basically to also you, Joachim, and the whole team for the great regulation on MiCA. So we also do see stable coins, frameworks in the euro area. And what I'm now really looking forward to and hoping for the European standard is to see more and more euro stable coins thrive. And here also congrats to Patrick, your team, for soon for issuing a euro stable coin, because currently we do see primarily these movements and dynamics in China and the US. And I really hope that this flourishes more in the euro area in the next few years, because from a geopolitical perspective, stable coins, I'm primarily driven from the US, CBDCs from China. So this also means, can be a threat for Europe, but also on the other hand, if we play it right, and companies do as well, it can also be a benefit, because then the euro is basically easier to access from all across the world, which could in the end also lead to a more important dimension of the euro, right? So I think the regulation is now there, and I think now it's really time to build, and I hope that this will positively impact the euro, and that the euro will not lag more in terms of CBDC and stable coins.
Thank you, Jonas. Yeah, you just mentioned, and according to CoinGecko, at the end of 2021, 17 of the 20 most significant stable coins were US dollar backed, meaning that every stable coin token is backed by a corresponding amount of US dollars or a US dollar denominated security. And in June this year, Circle issued a euro coin, a euro-denominated stablecoin. So Patrick, maybe can you elaborate on what opportunities a private euro stablecoin can offer, and why this is an option for the euro area?
Sure, very happy to. And first of all, hi to everyone. I'm very happy to be part again of the Crypto Asset Conference, and congrats to everyone who set this amazing agenda and conference up once again. Why do we see the demand that we see for private stablecoins? And I think it is quite obvious to everyone looking at the market that private stablecoins have found product market fit. We have seen that, in the last couple of years, this market capitalization of private stablecoins combined, even reaching 150 billion. So I think by now it's clear to everyone that stablecoins are one of the killer use cases for crypto and blockchain technology in general. And it is important to stress the fact that stablecoins are not only a product in and of themselves, but they also basically offer a technology platform that other companies can build upon. So every single company in Europe, for example, can build and automate certain treasury operations, payments operations on top of, for example, Eurocoin or USDC. And that is what, the company I work for, Circle, is trying to enable and to make as fast and as efficient as possible. To just give you a quick overview of stablecoin use cases, and as mentioned, that spans very widely. That starts obviously with the currently dominating use cases that still are part of the more crypto native capital markets. So currently stablecoins are used in the crypto markets for trading, for settlement, and then within so-called DeFi, so the crypto capital markets, for a lot of lending, borrowing, and treasury operations. I think that's where we see the largest demand right now for private stablecoins. But what we're currently observing also at Circle, if you look at who's holding, for example, our stablecoins and how are they interacting with them, is that we see a slight shift from those crypto native use cases to more and more real world utility and payments use cases. And those kind of payments use cases can span from, global remittances, where, for example, we help facilitate remittances from the US to Latin America or to Mexico. Those cross-border payments can span to, from foreign aid and disaster relief to just expanding financial access, So there are a lot of exciting payments use cases being built right now. And we expect those real-world utility use cases to grow quite significantly in the future. And in the EU, and that's also why Circle decided to issue a euro stablecoin in the EU, we see a lot of exciting, for example, trade finance use cases ahead, treasury use cases ahead, also foreign exchange trading and settlement use cases ahead through private stablecoins and much more, even merchant payments and others. But yeah. That might be enough for a first starting point on use cases.
Thank you, Patrick. Yeah, we know that the digital euro is a Eurosystem initiative, but it's also a joint European project that involves a very diverse set of stakeholders. And there is a close cooperation with the European Commission to review at technical level a broad range of policy, legal, and technical questions. And in the first quarter of the 2023, the European Commission will propose a regulation to establish the digital euro. So, Joachim, where does the European Commission stand with the preparatory work of the digital euro?
Quite advanced, but first of all, very happy to see so many familiar faces and friends. Congratulations for a perfect time management, actually for the whole day. We are top on the minute, on the spot, so really amazing, and congratulations to everyone involved. I'd love to be in Frankfurt. It's not possible today, but next time I will be there, but great event. So where are we? First of all, I'd like to comment on what you said actually as your introductory remark. The Commission is slightly more important than making some technical analysis. Actually, based on Article 133 of the treaty, we are responsible for ensuring the integrity of the euro as a single currency in the Eurozone. So basically, we are setting, I would say, the framework where then the ECB is responsible for the practical matters and the technical aspects thereof. And we are taking this very seriously because we want this exercise to be in line with the philosophy that we have been adopting to finance, and especially also to finance in the crypto and digital domain for a decade now, namely that is very much driven by use cases, but also indeed by the international dimension. And I must congratulate Jonas and Patrick because they extremely well summarized the two drivers that are driving our assessment. First of all, the international aspects, and secondly, the use cases. And on the use cases, we have to be specific because indeed you mentioned the public consultation that we made earlier this year in order to complement our own thinking. We had more than 300 replies, 60% from citizens. And indeed, you can identify two broad use cases. And the practical issue is actually, or the policy issue, to combine the two, which is absolutely not evident because there's a certain risk that you get a sort of Frankenstein's monster if you really design things that are not compatible at the end of the day. And if you take half a cow and half a sheep and put that together, it will not live and give milk. So at the end of the day, what we have been doing over this year in a very, I would say, profound analysis is to look at really, based on these drivers, what can we do in order to proceed as much as possible, indeed to be ready, and we will be, in next spring of 2023 to come up with a draft regulation as we have announced. But the key discussions will still have to be had in the political domain. And there is, for example, on the 7th of November, a big conference in Brussels, where many of you will be present, I myself as well, where the European Commission will discuss with the European Central Bank at highest level what the policy options are. What we see, and I will be rather short not to endanger your time management, is indeed these two big use cases. From the side of the citizens, the replies that we get and what we of course see is that they want a digital equivalent of cash, which at the end of the day means all the features of cash. So privacy and protection of your data, and indeed the insurance that you have the same functionalities. And if you were to combine such a use case, retail digital euro in that way, with the full Monty of I would say, regulation in the financial markets, that would not work, because the very clear expression from citizens is that they want to have the exact, I would say, framework as they have in the real domain. The second thing is the requirements that we need for the machine-to-machine economy, for Web3, for the metaverse that is coming up. And indeed, we have made a very thorough assessment. We have just reached the final stages of that. Of course, that's still internal cuisine. I cannot say more of that, but we have taken into account all the developments that we see on the market, up to and including the metaverse, where actually President von der Leyen has announced in September, so not too long ago, that the Commission will focus on the metaverse also in the future. And we need to see that whatever we do also on a digital euro, but also on digital identity and all other matters, fully fits into the use cases there. And I think it's extremely good for me to see that everyone involved in the exercise has done their homework very well. We have a profound understanding of the needs of let's say, what can programmability bring to that discussion? But it is far from certain that at the end of the day will directly lead into what will be done for a digital euro, because as said, that's a political decision with a lot of, I would say, elements that still come in here. And of course, the world is not sleeping. The world is moving ahead quickly. The dollar is at the moment extremely strong. So I think that's an uphill battle in this regard, which is the more important that we're having discussions like this, but also flagging of the use cases, things that Circle and others are doing indeed to show that it can work and stimulate the discussion. So that's also an invitation to everyone to get actively involved in that. We need you to showcase the use cases and help us build a really meaningful digital world.
Thank you so much. Agatha, turning to you, we know that the transition from Web 2 to Web 3 has been changed, not only ownership control concerning values, but also information. And people's dependence either to a central bank or a big tech. How do you envision the digital euro's role in the Web 3 space?
Thank you very much, and welcome everybody. Welcome all the familiar faces. It's wonderful to see so many familiar faces in the same place on the same conference again. And thank you for the remarks that Johannes, Patrick, and Joachim have done before me, because this all comes together, and I'm quite glad that these comments have been made. And in terms of Web 3.0, really, that's a very good question, because how digital euro will relate to be integrated with and synced with Web 3.0 is indeed a very fundamental question. And the choices that we will make, the ones that Joachim is mentioning, the regulatory choices, technical choices, political choices, are truly fundamental, because technology is agile, it's flexible really, and it's very evolving and neutral. So it can be a very empowering tool for financial inclusion, for privacy, for financial freedom, for efficiency and security and reliability. But on its extreme, and I'm not claiming this is a concern specifically for Europe, but such technology can also be a tool for many other things like surveillance or censorship, control, oppression, or in its extreme abuse of power and coercion. So policy and design choices will determine that, and digital euro will be a very powerful tool. It is crucial how this power will be distributed and in whose hands it will be vested. And I think we are currently facing enormous tasks, because not only we are building new internet, we are building new cyberspace, Web 3.0 space, new technological foundations, new infrastructure, new tools for new internet, but we are also at the same time creating new forms of money. So this is like the double difficulty and double of the challenge. So, and the same like we witnessed in early 2.0 internet, there is a lot of unknowns still, and there is a lot of things are changing in technological space rapidly. There are a lot of technological developments, regulatory developments. There are fails, there are successes, and there is a volatility. So technological progress is what it is. But first of all, it's extremely fast at the moment. So many of us can hardly comprehend and keep up with that development. And many authorities are struggling with that as well. And that includes many regulators, many policymakers. There's a lot of learning, there is a lot of research that needs to be done to make sure we achieve our tasks. So with all of these variables taken into account, what in my view is very important at the minimum really is to ensure that any digital euro design is principle driven and that those principles prioritize right to privacy and security for individual to start with. So the opportunity is also unique and we have to make sure we utilize it to the best possible way to leverage this fantastic technological development that is happening. So we can improve what we have, we can actually make it better, but this is not also guaranteed. And there are some projects out there that can attest to that. So we can look at Chinese CBDC, for example, and this is based on, this is completely distinct from any decentralized ledger. It's a centralized operation, very much controlled and supervised by authorities, and it's not that fundamentally different from other current existing online digital payment options in China, such as WeChat or Alipay. So I would like to see digital euro that powers micropayments, that powers machine-to-machine payments, metaverse, that empowers new business models in Europe, and where users can experience unprecedented level of freedom, where they will own their own data, that will foster innovation, that will support emerging infrastructures of Web 3.0 internet, and will open opportunities to trade worldwide, and it will become part of the future digital economy. So not many things to ask for.
Thank you, Agatha. Klaus, I know that you have a lot of experience in advising companies. You just made a presentation telling us that it's really important to learn from pilots. And I'd like to know your opinion about how the digital euro could change the existing business models, but also provide the basis for the emergence of new ones.
Yeah, thank you for having me here. From the technology side, from things we appear here, is that we can, with the basis of the digital euro, we have the foundation to have a legal tender for all kind of payment operations. So we do not no longer rely only on private money, which is provided by all of the financial industry. It will still be there, but we have another opportunity as well. So that's somewhat similar to the possibilities for me as an end user, as a citizen here in Europe. What I have when I'm at a supermarket and want to do cash out, I can choose whether I want to pay with cash or with some credit cards or with my banking cards or whatever. So I can choose what I want. And if I reflect it, this means also that I can choose which level of privacy I want to have. Yeah, so when I pay in cash, nobody knows who I am, and I value that. When I pay unexpectedly for my wife with my credit card for some fancy stuff, I maybe ask after that, and I experience that. So this kind of privacy and non-privacy, that's a real world issue, and that is, from my perspective, the really interesting part. We need to really bake privacy into the digital euro. Otherwise, we are just mimicking exactly that, what we see in China, where a central organization simply controls the entire payment market. And we must really fight very hard that the design, what we do, does not allow that. And this means that we design it from first principles, that these informations are not into the system baked in. That does not mean, for example, that we can have a kind of a wallet which is operated by a commercial bank where the digital euro lies in. And of course, there's a KYC process going on. I can put a lot of money into that. And every time when I do an operation here, this is somehow monitored indirectly or directly by the central bank. That's okay. Yeah, but what I want to have is something which is as private as possible. And this is what we currently don't have when we do any kind of e-commerce activities, something like that. There's always some organization, let it be Amazon, let it be PayPal, let it be credit cards industry. They all exactly know how much I pay at what shop, and most likely they even know what is on the bill. I don't want to have it. So that is the opportunity what we have when we introduce a digital euro, a legal tender. It's perfectly fine money, and it's guaranteed to be private. That is, for me, it's really the difference between all the existing payment infrastructures we already have, because digital money is there for 50 years or something like that.
Yeah, we are almost out of time. Questions from the audience?
We have some questions from our digital audience, at least, but I don't want to neglect our in-presence audience. Julia, would you be so kind to provide the gentleman with the microphone while I'm reading out the first question to the panel? Because, like, you guys generated a lot of questions, actually. I'm just giving you the question, and you'll see who answers it. Some blockchains are promoting themselves heavily as a base layer for CBDCs. Do you think this kind of lobbyism is effective or necessary?
Who wants to jump?
I probably let Joachim take this one. I just have 2 sentences I want to say on that topic. Obviously, the choice of the technology and the underlying infrastructure is a key decision to take when it comes to both public, digital euros, but also private digital euros like Eurocoin, the stablecoin Circle issued. And yeah, the question really comes down who's choosing the technology stack and how to adapt to those fast iterations that we see technology having in our current era. And what we at least at Circle believe is like that analog to our Western values, private competition, open markets are probably best for choosing the right technology stacks that are able to basically meet the expectations of the customers out there. That's why we, for example, as a company, we issued our private stablecoins on dozens of different blockchains, and at the end of the day, it's the market and the demand from our consumers and customers that will decide which technology standard will prevail. But on the other part of the question, the lobbying part, I let Joachim respond.
Well, I mean, you said it nearly all. I mean, I really am very positive about everyone positioning themselves in the market. And what is lobbying? I mean, at the end of the day, I see so many, and I see it daily, direct, indirect attempts by the legacy system to block any form of innovation in this space. I mean, that is lobbying. Just to bring out your solution and then have the market decide on what works and not, for me, is not lobbying, it's making a business case, and therefore I can only recommend that. And we are smart enough at the end of the day, I think, to safeguard from a political level, as we've shown with MiCA and other things, how we can really give a proper environment to that. But recall MiCA, where we watched the space for a very long time, where we had competition on the market, but also between regulators for a very long time. And then we got something which I find rather liberal, and I think that should be here. So I can only welcome everyone who puts their nose really into the matter. And I think that everyone out there in the space is smart enough to see what is good and what is not so good.
Thank you.
Yeah, my question just relates really to the difference, pulling up from Klaus's presentation about the idea of a retail digital currency versus a wholesale, a central bank digital currency used among the banks. And just the view of the panel, I don't know who wants to take it, but which you would expect a wholesale digital currency to come before a retail, or at the same time, or what would be the outlook?
Maybe Jonas, would you like to comment?
Yeah, maybe I start. And thanks for the question. A really, really good question, I have to admit. So I think Joachim said very important aspects that retail CBDC has to solve a specific use case, right? So there has to be a requirement by the people, and if the requirement would not be there, a retail CBDC shouldn't be issued. I think there is, so I think it should be. But there should be a very, very clear use case. And to me, as of today, I think there is a very clear use case around wholesale CBDC. So when it comes to settlement, with digital assets, cross-border payments, I think the use case is here, and for me, it's quite obvious. So if you would ask me as a politician or central banker to decide which one to choose, I would, start with a wholesale one rather early and have the retail one maybe in, I don't know, 3 years. Would be my best guess. But I think on the long term, we would need both. But this is just my personal perspective.
Can I briefly add to that? Because indeed, that's a very important point that Jonas makes, but also the question, we are working in parallel. And I think that is something I missed when I just said a few things. We, of course, have to work on the digital euro. It's our mandate. It is important. But at the same time, we have set up a group with industry and financial market stakeholders that's co-led by Commission Services, the Bundesverband Deutscher Banken, and a number of, I would say, renowned companies that have put their interest in the space. And we need that discussion on the wholesale euro, on the use cases, indeed, to drive the political discussion forward. Political discussions take ages. And if there's not the movement from the market, and we support that very actively, then it will take even more time. And I think that realistically, indeed, we have a parallel movement here, and probably we have much faster a sound wholesale solution that can be implemented privately than we have a full public solution. But that will have to be seen.
Thank you. We are almost out of time. There is more question?
We can, yeah, there's one more question.
Okay,
I'll just be the avatar of the online audience, if you don't mind. The question is, especially with influential players like Circle is one, when, or maybe it has already happened, when is the topic of stablecoins becoming more of a geopolitical one than a regulatory one?
Patrick, do you want to comment?
Yeah, sure. Happy to say a few thoughts on that. So I think actually the ECB issued a paper, I think a couple of months ago, on the international role of the euro. It's quite a standard report that the ECB issues, I think, every year. And it was the first time that the ECB actually tackled exactly that question. So do private stablecoins already have a geopolitical question for the international role of the euro? And I think that report says that as of now, the importance of private stablecoins, as I mentioned, still sitting mostly in those crypto native use cases, is limited. But everyone, and I think including us, the ECB and many others, are expecting that the international role and hence also the geopolitical role of those private stablecoins will grow in the future. And I think, and that's what I often say, is that the euro is the second biggest currency by far. If you look at any kind of metrics, the euro is, I think, part of 35 to 40% of international SWIFT payments. It's the euro is is basically part of 20% of foreign exchange reserves at foreign central banks, but it only accounts to 0.2 or 0.3% of private stablecoins. And I think, and that's what we are trying to tackle with Eurocoin, is to increase that amount of euro-denominated stablecoins out there, because we just think that it makes sense from a market perspective, and we will see that reflected also in the market caps in the future.
Thank you. Agatha?
If I can add here, I just a quick on whether it's a political or regulatory issue. I think it's already been for a long time, and we can see that regulations like MiCA, 2/3 of it is dedicated to stablecoins, and major legislative initiatives in the US are also going to tackle stablecoins as the first of this innovation. So I think they are already recognized as a potential huge geopolitical issue, and that is reflected in regulatory activity. And that has been reflected since the announcement of Libra project back in 2019, which was actually a trigger for so many of the regulatory activities, reports. And that was, in my view, a point where stablecoins were really brought on the regulatory agenda and brought into the dimension of the awareness of this product was basically was born at that point. And that was quite extreme because Libra project was very significant. So it's been recognized ever since Libra has made an announcement that this is more than just and innovation, this has potentially profound financial, geopolitical, and economic consequences.
Klaus, do you want to comment on that?
No, not really.
Okay, so with said, I'd like to thank the panelists and also the audience for the questions, and see you at the next Crypto Assets Conference. Thank you.